What's up, everyone? It's Caddy with Money Vesting. So we are going to be talking about Nvidia, the winner on the day, pushing up quite a bit after hours. It was up a little bit over 9%, or in other words, $19 to $20 per share after hours after reporting their fourth quarter fiscal year 2023 results. So I'm going to break that down. I'm going to go over everything that they talked about. We're going to talk about the revenues, the earnings, the cash flows, the balance sheet, the valuation. Everything is going to be discussed, and we'll also talk a little bit about the technical analysis on this company, and then of course a little bit about the intrinsic value calculation. So as always, if you enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time, and the link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, you'll get access to all the buy and sell alerts, options alerts, trade ideas, and a lot of other private videos and private updates as well. So, first things first, let's just quickly break down the numbers for the company. Let me just open that up very quickly. And this right here were the numbers for Nvidia for the fourth fiscal quarter 2023. Revenue came in at just over $6 billion. We're not going to go over that miss or beat BS. We're just going to talk about the numbers. And revenue was down 21% on a year-over-year basis, slightly up quarter over quarter. Gross margins, this was something that I was really paying attention to. I mentioned it during our live stream. 63.3%, so that is a really good expansion from the third quarter fiscal year 23. So it's up 9.7% on a quarter-over-quarter basis, but still down on a year-over-year basis, down 2.1%. Operating expenses were slightly flat. They were pretty much almost exactly the same as last quarter, but up quite a bit from the same time last year, so up 27%. And operating income was $1.2 billion, which was down 58% on a year-over-year basis. And net income, the bottom line, $1.4 billion, down 53% year-over-year. And earnings per share, 57 cents per share, down 52% year-over-year. This right here was their non-GAAP numbers. So again, adjusting for some of the non-cash expenses, stock-based comp, and all that stuff. Revenue is the same, down 21% year-over-year at $6 billion. Gross margins were a little bit higher, 66.1%. Operating income was also higher, $2.2 billion, but still down 40%. Net income and diluted EPS, they were both down over 30% year over year. This right here was going to be their entire fiscal year 2023 numbers. So revenue was very, very flat. They didn't really grow all that much. In fact, revenue stalled a little bit, $27 billion versus $26.9 billion same time last year. So they grew by about 1%. Gross margins were substantially down, so full 8 percentage point decline in gross margins. Operating income was down 58%, net income and diluted EPS down 55% each, and a little bit of a softer blow when you look at the non-GAAP numbers because of how much operating expenses are accounting for that stock-based compensation. So their SBC was about a little bit over $2 billion for the entirety of a fiscal year 2023. So their non-GAAP net income was over $8.3 billion. That was still down 26%. Diluted earnings per share, $3.34, down 25%. And operating income, $9 billion, down 29% from same time last year. So if you do the math right now for Nvidia, which is trading at $207.54, after hours trading at $225, right? It's up another 8.8% towards the close. So $226, just rounding things up to make things easier. 226 divided by 334, we are now trading at 67 times earnings on a non-GAAP basis, trailing, and on a GAAP adjusted basis, we divided by 174, we'd be trading at about 129 times earnings on a GAAP basis. This is on a trailing 12-month basis for the company. Absolute insanity, if you ask me. This right here is the outlook. So revenue is expected to be $6.5 billion, give or take 2%, and GAAP and non-GAAP gross margins at around 64.1% or 66.5% respectively. And then we've got operating expenses somewhere around 2.53 and 1.78 billion, GAAP versus non-GAAP respectively. And other income and expenses are expected to be an income of approximately 50 million, and GAAP and non-GAAP tax rates are expected at 13% plus or minus 1%. This is the outlook from the company. No outlook on the actual net income or earnings, but revenue expected at $6.5 billion. Now, unfortunately, a lot of their individual segments didn't really perform as well. So gaming, we already knew that it was not going to be the bright spot because it has not been something that Nvidia has been able to produce a lot of growth in entirety of 2022. So fourth quarter revenue was 1.83 billion, down 46% year over year. Data center was the big bright spot, in 2022, 2023. However, it did stall a little bit, so it was up. However, only 11% year over year and down 6% quarter over quarter to $3.62 billion. Professional visualizations down 65% year over year to 226 million, and automotive and embedded revenue, this was the bright spot here, up 135% year over year and up 17% quarter over quarter to $300 million. But this is a very, very small part of their overall business. Now, when it comes to the balance sheet, we have seen cash come down quite a bit, so from 21 billion to over 13 billion dollars. And then total current assets sitting at $23 billion, and then total assets sitting at $41 billion for the company. And their long-term debt has been coming down as well, so from $11 billion to $9.7 billion. So we got $13 billion of cash, $9.7 billion of long-term debt. So really, they've got a negative net debt, so that's a good balance sheet. And total assets also do exceed total current liabilities. Total assets exceed total liabilities, and total current liabilities also exceed current assets also exceed current liabilities. So all in all, balance sheet's good. We've got a positive current ratio. We've got a really good total asset to total liability ratio, and the company's also got a negative net debt. So balance sheet's never been an issue for Nvidia. This right here was posted by Matthias on Twitter, so really a shout out to him. And he pretty much summarized the performance of both Tesla and Nvidia. And Tesla's and Nvidia's 2022 performance. Tesla grew its revenue by 51% compared to 2021, while Nvidia's revenue stalled. It was only up 1%. Tesla grew earnings per share by 122% compared to 2021, while Nvidia's EPS shrunk 55%. And here we are, Tesla trading at a $639 billion market cap, a PE of 56, and we got Nvidia trading at 129 PE, which we talked about earlier, at a $560 billion market cap. I'm honestly really surprised and curious to see who right now is actually paying 129 times earnings cap basis for Nvidia. And to make matters worse, if we take simply the $26.974 billion in sales, and we compare it to Nvidia's market cap, which is right now at 560. So if we do 560 divided by 27, it is trading at 20.7 times sales. Sales. Price to sales, not price to earnings. A 20 times price to earnings would be fantastic, but no. It's trading at a 20.7 price to sales. Like, it's crazy. Like how much sentiment there is on this stock. It is wild. Absolutely wild. Getting up to 225 here. Getting up for the third retest at $230, which is a big resistance for Nvidia. So we'll kind of see whether it validates that level or if it breaks out or gets rejected. But 20 times, kind of rounding it up to 21 times sales is insane. It's crazy. It is actually crazy. So even if you take a look at the earnings and if you kind of forecast them out, you'll notice that price to sales trading at 18.87 for 2023. It's a little bit higher because of the market cap and the jump that we were seeing after hours. And even in January of 2024, like this 2024 fiscal year, they're going to grow revenue by 8.5%. At least that's what the expectations are. So $29 billion, right? So even if you take 30 billion, we're just going to be generous with Nvidia here. 560 billion divided by 30, 18.6 times sales. These price sales multiple on Nvidia is really, really high. Like what is the premium it's getting? And I haven't heard the earnings call yet, but I heard that there's a lot of mention of artificial intelligence, of AI. They were kind of hammering home this point around AI. So right here, you can even see the catalyst. So Nvidia adds to AI hype with a new cloud-based service. Stock jumps on forecast. So artificial intelligence is the new buzzword, in my opinion, I think. And a lot of stocks, are rallying on this particular catalyst, and Nvidia is no different. So I think, this is very clear in terms of the market dislocation, or in other words, the mispricing, at least in my opinion. This is straight up, like I would not personally, if I was in a situation that I did not own Nvidia right now, let's just say that I was, I would not be touching this stock with a 10-foot pole, because of the valuation, because of how high it's trading at. I mean, just not even the price to earnings, the price to sales is insane. It's maddening. But if I were somebody who actually owned the stock from before, I would certainly be looking at covered calls, because you are about to get a lot of insane premiums once the market opens tomorrow and the stock's already up 9%. You will get some really good premiums for Nvidia, especially for calls that you're looking to sell 1 month out, 2 months out, 3 months out for 240, 250, 270. You will get a lot of great premiums. And you can also do like a zero cost collar, which protects your downside and also locks in your profit for the future. So those are strategies that you can employ with Nvidia if you are holding on. But yeah, just this is just crazy. And if you go over to the intrinsic value calculator, and if you kind of run through some of the numbers here, and what I'm gonna do is I'm gonna simply go over to their actual income statement. So let's just go back. What I'm really curious about is their shares outstanding a little bit. So let's just see, share diluted outstanding 2523.8. So 2523.8, and we're going to plug in the net income, which they reported. So what I'm going to do is I'm actually going to take the non-GAAP number. So non-GAAP net income was, for the entire fiscal year 23, was $8.3 billion, right? So 8366. So we're going to plug that number in, 8366, and we end up with an EPS of 331. Just want to make sure that is correct. 334, so might be that share count is slightly lower. So let's just go with 2522 and 2520, 2519, 335. So 2.5 billion shares, and we end up with an EPS of about 335. Now, in terms of growth rate, right? What is going to be that growth rate for the company? So according to Seeing Alpha's estimates, so if you go over to earnings and if you go to earnings estimates, they're going to be growing earnings from 327, which was this year, right? 327, 330, around those levels, all the way to 839 by January of 2028. So 839 is going to be over here. And then we're also going to get January 2032, 1573. So we're going to plug that number in, 1573. And this year was 335. So we are looking at a CAGR of about 20% for Nvidia, right? 20% compounded annual growth rate for earnings, and just a little bit under 19% for 2032, for 9 years out. So you know what? I'm going to be a little bit more generous with Nvidia today. I'm going to go with 25% in growth in earnings, that Nvidia is going to be able to grow earnings per share by 25% compounded annually for the next 5 years. 25%, we're going to keep the 12% discount rate, 10% margin of safety, and pretty much, 0% share dilution. It's been pretty flat. Maybe even we can do like minus 0.5%. And for the P multiple, right? We're obviously not going to give it a 45 or 60 or 120 times P multiple to keep that PEG ratio intact at 1. I'm going to keep that at 25. And even then, this is, again, you have to understand that this is a very, very, very generous projection for Nvidia, right? Even then, it is trading at a 41% premium than its fair value. Like, I'm not even going with the analyst estimates of 20% or 18%. I'm actually going with 25, which I think is reasonable. I think a lot of people watching this video would agree to the fact that 25% growth rate and a 25 times P multiple is quite reasonable for Nvidia. It's not taking away credit from the fact that it's a very, very bright company. It's got a great future, but I think 25 times P multiple would do justice for a company that, pretty much had lower earnings, dropped by 50%, but it's expected to grow 25% over the longer term. And that gets us to a fair value of 133. Right now, Nvidia trading at 228 after hours, right? So at those prices, 226 to be precise. Right now, Nvidia is pricing in, let's just do a quick math here, 30, or let's just do 35, 35% growth, and no, let's just do 30% growth and 32 or 35. There we go. So right now, as it stands, Nvidia trading at a price of 227, 226, expecting 30% growth over the next 5 years and a PE multiple of 35 instead of 25, which is also not terribly bad, but it is a little bit of a stretch, right? It is definitely a very optimistic assumption that investors are making on Nvidia. Again, from 25% to 30% is really not that much of a difference, but the P multiple obviously is substantially higher from 25 to 35. So So that's where we are trading right now in terms of that fair value. But for me, I think we're going to be closer to 25. That's just me being generous today. If I were going off of my own analysis, I would mostly be giving it 2020, and we'd be sitting at a fair value of just a little bit under $90 per share for the company. But of course, the market disagrees. The market is, very euphoric. Sentiments very strong on Nvidia. So 226 is where we are. But just be careful, be cautious with this company. Don't get sucked into all the hype, but just think logically. Think about, what this company is really worth and what the numbers are telling you. So just wanted to kind of break down Nvidia's earnings. Let me know your thoughts on this company. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel, and hit that notification bell. Don't forget to check out the Patreon Discord link down below. We do have that 16% annual discount that's available for another 5 days if you want to take advantage of that. As always, happy investing, and I'll see you all in the next video.